gold is roaring back to life, reclaiming its throne above a massive psychological milestone. The XAU-USD pair has successfully regained positive traction during Thursday's Asian session, surging back over the $4,300 mark as a dramatic shift in global sentiment triggers aggressive profit-taking across the United States dollar. The primary catalyst giving the precious metal a powerful lift is a historic, game-changing diplomatic breakthrough. Investors' confidence is skyrocketing after U.S. President Donald Trump and Iranian President Masoud Pezeshkian electronically signed a landmark Memorandum of Understanding. This historic agreement explicitly aims to end hostilities and immediately reopen the vital Strait of Hormuz shipping corridor, adding massive fuel to the relief rally. Trump clarified that the upcoming 60-day negotiation period to finalize an agreement on Iran's nuclear program is not a hard deadline. This sudden wave of geopolitical optimism has instantly prompted macro traders to dump their safe haven defensive dollar positions. However, gold bulls are running directly into a heavy, hawkish wall erected by the Federal Reserve. The overnight drop in the US dollar is purely a technical correction from its highest levels since late March. A peak hit in direct response to a deeply hawkish monetary policy update. At the conclusion of the very first rate-setting meeting under the new Fed chair, Kevin Warsh, the central bank kept its benchmark interest rate unchanged at a target range of 3.5% to 3.75%. Crucially, the Fed completely eliminated its previous language indicating a bias toward further easing. Instead, the committee sent an unmistakable message that they support a higher-for-longer regime, lifting their year-end Fed funds rate projection to 3.8%. Wall Street reacted instantly, with traders aggressively pricing in a staggering 85% chance of a 25 basis point interest rate hike this December. This hawkish shift has driven a sharp structural rise in U.S. Treasury bond yields. Because physical gold is a non-yielding asset, these elevated yields heavily increase the opportunity cost of holding bullion, which is highly likely to cap the immediate upside and prevent institutional desks from placing overly aggressive bullish bets. From a structural perspective, gold has executed a beautiful short-term counterattack, but it remains locked in a fierce tug-of-war between a melting geopolitical risk premium and a fiercely restrictive central bank. Will this historic peace treaty propel gold into an unstoppable breakout toward new all-time highs? Or will Kevin Warsh's hawkish Fed crush the recovery at the next major technical resistance zone? Make sure you do not get caught on the wrong side of this massive fundamental macro shift. Hit that subscribe button right now for daily, fast-paced insights and breaking technical updates.